So good morning, everyone. Welcome to the 6th session of the Change Order Winter Training Series. This one will be about the paperwork and a little bit about Site Manager. This is not a replacement for Site Manager training. For any of you that haven't had formal training in the office engineering aspects of it, you should still try to seek that out for yourselves. I will be presenting the first part of this, and I'll be joined with, by Eric Harding. So to recap, what items can be addressed by change order? Your standard increases and decreases within thresholds, existing items beyond thresholds at bid price, new agreed price items for work performed on existing items beyond thresholds where the overrun is renegotiated, new items of work based on agreed price analysis, and force account work for any of the reasons seen here on the slide. You may also be doing a change order to add approved field change sheets to a contract. As much as possible, you should try to incorporate your field change sheets along with the item increases or decreases or new items that they are producing. You should try to keep those change orders as a standalone. So if you have an issue, it should try to be a standalone order. Don't mix it in with a whole bunch of other stuff. OSC does not like $0 change orders very much. It creates some issues with the different accounting systems. So as much as possible, try to not do a $0 change order. However, there may be cases where you are, like a warranty specification. Other change order types are for jock adjustments. If you have a jock contract, you may have to create a new category if you have additional funding for your project, and/or you may be adjusting or shifting funding. Those last two, involving funding, should not be done in a bubble. They need a lot of people involved and a lot of pre-thought and some pre-action by either your local planning group or main office. So just as a reminder, we've gone over this in the previous sessions, but if you have an existing contract item overrun, you do not need a new item if your increase is within thresholds, the major and minor thresholds, or if you go above those thresholds, but you've determined that your bid price is acceptable, both to the department and the contractor has concurred, you do not need a new item when you put that overrun onto a change order. New items are required when you renegotiate your existing items when they've gone over the threshold. You'll still use the same item number. That's the terminology we take from our spec book and us old folks. In Site Manager, it's your item code. So your item code / item number will remain the same, but you will get a new line item number, and that will come from Business Intelligence. And you'll have to add a supplemental description to that new line item number, adding an A before the existing description of the item. Before you sit down and go into Site Manager, you already know that you've done a lot of paperwork and correspondence and negotiations with your contractor. And if you're in a region that requires all the prices to be vetted first, you'll have already gotten concurrence from either your area supervisor or your regional change order specialist. The other thing you need to do before you sit down in Site Manager is you need to refer to the QRGs. So the QRGs can be found on the Office of Construction website. All the change order QRGs that you see on the top left are directly from the QRG index. If you've already been into your CAM manual for guidance, the QRGs are also linked in the CAM manual that you see on the right side of the screen. And as I was pulling out these examples, I found a QRG for change order for hot mix asphalt warranty. I've never seen that one before, and I didn't even open it. So that one's out there too if you have that circumstance. So refer to your QRGs after you've done all your preliminary paperwork before you sit down in Site Manager. The first screen that you're going to get to when you go into Site Manager and you create a new change order is your header tab. You're going to put in a brief description of what your change order is. It may be cleanup change order. If it's purely fuel, asphalt, or steel adjustment, you can put that in the description. If it's an issue, so to speak, you can put what that issue is, whether it's a design change or something like that. And then you have a drop-down menu that's here in the red box, and you're going to pick a reason code. Now, these are preset reason codes, and some of them are misunderstood. So we're going to go over those on the next screen. And we've highlighted the most common ones. You should not be using reason codes that you don't understand. So a lot of times I've seen betterment picked. I've seen requirements contract picked. A requirements contract is a specific contract type. So if you don't have a requirements contract, don't pick requirements as your reason code. These are the common reason codes, and if all else fails, you could always pick other, or you could reach out to your regional change order specialist and ask their advice on what you should put for a region code for a specific order type. To get your next line item number, you also need this before you get too far into Site Manager in doing your entries. I believe we showed the screen before, but you'll go into Business Intelligence, into the Change Order menu, and you'll click on the item for Get Next Line Item Number. And it will give you the last one that you've used, whether that's pending or active. If it's on a change order already that's in draft or pending approval, it'll be pending. If it's active, it's on an approved change order. Then it'll give you the recommendation for your next one. Now, as you'll see, they go up by twos. A lot of people will just guess. They'll pull out their last Con R22 and find the last one and just add 2 to it. That's great if you want to do that and if you're perfect and you never forget anything. But we always recommend in Site Manager training that you use the report to get the next line item number. Now, if you're going to be adding multiple items on a change order, you have to go to BI for every item of that change order? No. You could just go to BI once, get the next one, and then assign them going up by 2s to all the items that you're going to enter. You will get a warning if you try to use a line item number that's already in use. But the reason we like you to go to the report is that you don't overlook a possible line item number. That if the last one was 0606, that you don't go and think that you're up to 0612, you know, because then you're going to be missing 8 and 10. The Items tab is the next tab that you'll go into in Site Manager. And for every item that you want to add to the contract, you're either going to choose it out of the spec book icon for existing items, or you're going to click the new icon to create a new item number. Excuse me, to create a new item, not a new item number. There are QRGs for each of these circumstances that you will follow. There's one for creating new items. There's one for creating existing items. There's one for creating dummy items, which we haven't discussed yet. But if there's time at the end of this session, we can bring that up. It's very important that you follow the QRGs when it comes to what needs to be entered into the field. The white fields are the fields that you'll be filling out. And the supplemental description line in the middle of the red box is where if you have a new item, you're going to add the A before the item description so that when it's printed out on the reports, we can see the difference between the original and the new one. If you have to have a 950 item, if you're not renegotiating an item, you're creating an entirely new item of work to the contract, as much as possible, you should be trying to find an item that is in our specification. If you have a conglomeration of different items of work that you're putting into one new item, then you're going to be picking a 950 item. Or if you just have something that's just so wacky we've never encountered before, you're going to pick a 950 item. You're going to refer to the CAM manual, and I'll show you on the next slide what it looks like to find what type of 950 item you're going to use. You don't just start with 950, 01, 02, 03, 04. You're going to have a base of the 2 digits to the right of the decimal, and then you will serialize them if you have more than one of those items in your contract. 950 items also require a line item number where you'll go for the business intelligence report. They also require a supplemental description, either with an A in front if it's an agreed price, or FAW in front if it is account work. So here's the list of the possible 950 items that you will use. They are broken down by the different areas of the spec book. So based on the general type of work that you're performing, you will pick one of these sections and the appropriate item number. Like I said, if you're doing a new item of work that incorporates different sections of the spec book, let's say we're doing a drainage run, and you're including the excavation and the backfill and all the drainage items, you're going to be utilizing specifications from both the 200 section and the 600 section, but your predominant work for this new item will be drainage. So you'll pick 95009 drainage for this new item of work. And again, if you are going to be creating new items of work in your contract more than once, utilizing 950s, the first item of work that you're going to incorporate that's drainage related will be 95009. The next time you have to add a 950 item for drainage, it'll be 950 0901, 0902, etc. Again, this information is in your QRGs and here in your CAM manual. Do not use 95019 miscellaneous just because you don't know what other type to use. The miscellaneous should be a last ditch item number that you choose. And again, your regional change order specialist knows all about these, and you should reach out to them if you have any questions before you choose an item number incorrectly. Because once you start submitting paperwork with the item number on it, you don't want to have to go back and edit that paperwork before the change order gets approved. When you're entering a 950 item in Site Manager, the default will be, we chose for this example, 95025 utilities. So the default item description will say utilities. Your supplemental description will be a description of your work. And in this case, it was a force account for sewer bypass work. So that will be FAW-sewer bypass. And then when you copy and paste all of the information into the change order item description field, you'll end up with 950-2501 utilities FAW-sewer bypass. Now, why is this important? Because you'll see on the next screen what things look like on our CONAR 22 reports if they weren't labeled properly. So we have 10 miscellaneous items, which again, if you're awake and paying attention, you're not going to choose miscellaneous unless you absolutely have to. I see descriptions here that could have been used in different 950 items to be more intuitive as to what they are. But if you don't put that supplemental description in there, you're just going to end up with miscellaneous. So that's why supplemental description is important. And again, this is an old example prior to consistency and education in the region, so we don't see any A's or FAWs on this screen. I'm going to take a brief breather and move Mike Pimpinella into the panelist, which will unmute him briefly. Good morning, Mike. And then the last tab that you're going to be dealing with on your change orders in Site Manager is the explanations tab. And we'll get into explanations in a few minutes. You're always going to start with your header. You have to put in your change order description and your change order reason code first. And I'm going to quickly move back to the header tab so that you can see, and I'm sorry, this is a bad example. We don't see it, but we have function codes. We didn't grab that screenshot. You have function check boxes. You're going to be checking the boxes for added work if you need to create new item numbers, and you're going to check the box for overruns, underruns, if you are adjusting existing items. So if you have a change order that has both of those circumstances, you're going to have to check both of those boxes. And I apologize for not having a good screen example there for you. So again, your header is going to indicate what type of change order this is, what the boxes are going to be checked. We only do added work and overruns, underruns, or time adjustments. You do not click the box for force account or for $0 in those function codes. If you're following your QRGs properly, you're only doing what the QRGs tell you to. If the QRG doesn't explicitly tell you something, don't do it on your own. So you're going to have your header filled out, you're going to enter the items or create the new items that you want to create, and then you can move to the explanations tab. If you try to click on the time adjustment tab, you'll get a message that that wasn't chosen on your header. You cannot combine a time adjustment with items on a change order. They have to be separate change orders. And I'm going to move to the next screen and turn it over to Eric, who will talk about change order explanations a little more in depth. Before we move on, Eric, I have a question.
Yes.
When using the FCP to offset overrun costs, is that considered a zero cost change order? So if you're using an FCP change order, those are supposed to be $0 change orders. When
Yes.
I said earlier that OSC doesn't like $0 change orders, they don't like $0 change orders that come all the way up to them. So a traditional change order that results in $0 can create some issues. So we try to avoid them as much as possible. But if you have a true $0 change order that's an FCP, it's not going to OSC, so it's not an issue for them because FCPs are $0 and they only go to the regional construction engineer level.
Yeah, and what can you hear me?
Yeah.
Yeah, what can happen is if you have a $0 change order, I don't see it as much anymore, but site manager used to assume that that was a field change payment, whether you selected that or not, and it would limit the approval level.
Right. And
I haven't seen that in a while, but that used to happen quite often.
And we will, at the end of our slides, we will discuss overriding site managers' assumed approval levels. But the key piece to remember for the audience here is you want to try not to have a $0 change order going all the way to OSC. So always incorporate as much other things into something like that as you can without it muddying the waters of what your issue is for that order. And that's all I have for questions so far.
Okay. Change order explanations. Writing, I'll say brief, concise, yet still have enough detail in the explanation is a real science. It's an art form. Some of my guys are great at it, others are not. But we have to answer a few basic questions. We need to provide where was the work performed? Basic contract location, station offset, street intersection, anything that'll identify a single point on the contract or an area where the work was performed. Why is the change required? for bigger dollar stuff, it's not good enough to just say, you know, engineer's estimate was, you know, not enough. That if you're getting into bigger dollar values, getting over near thresholds, you need something more detailed. You need to do your homework, get into the engineer's estimate, figure out what they were trying to do with the quantity, and you just have to determine why is your quantity different than what the engineer has proposed. Who requested the change? You know, this one typically just happens organically. It's something that needs to be done on the contract. Include the concurrence for, you know, main office or regional support groups. If you bring in the soils group, or if you bring in main office structures or anything like that, and they provide you direction, you need to include that, you know, and that direction also affects the items and payments. You need to include that correspondence in your change order. When, you know, is just a basic time frame. It doesn't have to be at, you know, 7:30 Tuesday morning, but a general sense of when the work was done. Explanation for a renegotiated item must include what comparison was used to justify the price. Was it weighted average award price, average of 3 lowest bidders? Sometimes you can have it either way. The contractor may send a price analysis to justify their bid price if that price is in excess of the weighted average award price or the 3 lowest bidders.
Eric,
yes.
I have a question. You mentioned bigger dollar value. Is there a general rule of thumb? What Eric meant by that was if your quantities are increasing by more than what is assumed to be due to more accurate field measurements, which that general rule of thumb is about a 10% increase, you know, then you can usually say it's due to more accurate field measurements than the design engineer's estimate. But you can't say more accurate field measurements if there was a blow in the quantity more than, you know, 10, maybe even 15%. So the bigger dollar value increases are usually because an entire situation was missed or a gross miscalculation, something like that. So the general rule of thumb for when you need to get more detailed about a difference between your estimate and your actual is anything over 10%, you should be exploring why did this quantity increase that much? What was missed in the estimate? Or that's also, before you sit down to site manager, something you should have looked at, were our calculations accurate? You know, it's not always a design error when our quantities don't match. Sometimes we have a calculation error or a double payment. So you can't just assume everything was missed by the designer. You have to look when these values start changing by more than 10%, you have to see why. And it could be, you know, either way, that we had a problem with our quantities or we had a problem with the estimate.
Yeah, and I tend to look at both the percent increase and the money, because if we're talking about a small item that is, you know, 200, if you're at 200%, yet it's only $500 or $1,000, and I'm not gonna work real hard trying to chase down a better explanation for $1,000. So I look at both, and I'll ask for more detailed explanations for, you know, something that might be less than 10%, but has a large impact on the cost of the project. You know, so I look at both the percent and the impact dollar-wise to the contract. Header items, explanations. All right. Attach the following as required by the region to the header. You always need the approved ConR 104. Correspondence with the contractors for agreed price work. One thing I'll mention, the agreed price worksheet has no signature fields for the contractor and the department, so they need to be accompanied by an agreed price letter or an email. As long as the email is clear, states the item and what the price is that they're accepting.
Hey, Eric?
We have feedback.
Yep.
Yeah, I'm sorry. I just wanted to point out that actually the new Merck 26 and 27s do have signature fields.
Oh, they do?
Yeah, it was updated about a month ago.
Okay.
Okay, so both of them are on the web with signature fields.
All right, I will distribute those to my guys for sure.
Okay.
All right, so scratch what I just said about the Merck 26 and 27. They now have signature fields, so they don't necessarily require an agreed price letter, though it can't hurt to have one anyway. All supporting documentation be labeled D number, CO number, item number, and D number are critical. We realize that change order number, you know, you may start an item out in one order, and for some reason you have to pull it. You're getting, you know, contractors delaying getting your paperwork, and you got to pull it out of a change order. But the D number and the item number are the most important of those. Special specifications, we're not required to write special specs for 950s anymore, but if there is a special spec that is required for an item, that needs to be attached. The approved funding, the blanket attachment B for any order over $20,000. Now, this isn't for any item over $20,000. This is the net increase to your contract. So if you've got some forced accounts and some added work, and then you're pulling out a bunch of underruns on the same change order, if that change order total is over $20,000, then you'll need that blanket attachment. And if it's under, you don't. For forced accounts, you need the completely filled out signed Merck forced accounts. Invoices for the materials, blue book sheets, appropriate insurance documentation, of course, including the workers' compensation with EMR of 1.0. And you'll need to note any reference documents such as field change sheets, plan sheets, emails, letters, design approvals. Again, the ConR 104 authorization of extra work, and any previous increase, decrease on other change orders.
Eric, we have a question. Are field change sheets still needed to be added to the contract by change order, even if they have a zero cost impact?
Yeah, we like to get them because by attaching it to a change order, you are then officially incorporating that change into the contract. If there's no cost impact, what you'll do, what I've always done is you just put it on your next routine change order. Routine change order that goes all the way to the OSC. It doesn't do any good to put it on a field change payment, change order. But if it has no items associated with it, but you still need it incorporated into the project, you put it on your next routine change order that has full approval. All right, here's an example that I threw together. You're going to see a lot of stuff redacted because this was an actual agreed price on a change order. Right here's the agreed price letter. It states the item, states the price they're agreeing to. Those are the two most important features of that letter. All right, here's a MERC 26, prime contractor agreed price. What I want you to notice is that we're just identifying trades. We are not identifying individuals. We have a foreman, operator, paver, roller, laborer for the screed. I mean, this is pretty good what they did here. Labor, asphalt, truck jet teamster for the water truck. So those are not individuals. Those are just labor trades and groups. Workers' comp, that'll be based on an EMR of 1.0. The letter will be required to be attached. You see they have materials, equipment, and a service here. So what the contractor is required to fill in all this information needs to be verifiable with the attached documents that we're going to look at in just a minute. They're going to put their profit and overhead in. See at the towards the bottom here, overhead and profit. That is, I think, E. I can't read that very well. 20% for the prime contractor, and they've got 5% on their services. Helps. I don't always see guys do this, but it should be required that they put in. Now this is an agreed price, so you don't have a pinned down quantity just yet. But put in your best guesstimate quantity, and of course fill in the units, and that way the bottom of the sheet does all the math for you. This particular one here comes out to $107.45 a ton for some top course 50 series, it looks like. Other insurance, this 5.275, that is the general liability umbrella policy. That goes by several different names. Okay, so this is a material invoice. Probably should be a material quote for an agreed price because they technically have not done the work yet. But assuming you're on a paving job, you know, you may have had this mix somewhere else on the job. So an invoice is, you know, not the best, but it's what I had. What I want you to know, M1 right on the top, so I know going back to that MERC 26 that I'm looking at the first material. Got a mix description here, 9.5, that sounds right. Price is circled, that's perfect, draws my eye right to it. I can review this really quick. Go ahead, Amy. Oh. All right, now we're on to the service. This looks like trucking, labeled S1. We're just looking for the general rate. All the rates are the same, 140 bucks an hour. Easy to go back to the MERC 26 and say, yep, check, service 1, 140 bucks an hour. Hours look reasonable. That's an easy check. Makes your If the contractor does this, it makes your life easy. And when this gets to the regional office, it makes your regional change order specialist's life a lot easier. Things are labeled. You highlight unit prices. It draws your eye right to it. You can zip right through one of these quick as far as review goes.
Now, again, folks, this was an older example. And as we discussed previously, if you have approved subcontractors for trucking, they may not be included as services on agreed prices or force account work. All approved subcontractors, regardless of what type of work they are doing, need to be represented properly on MERC 27 for agreed price work or on the force account sheets as a subcontractor. These invoices with hourly rates are not acceptable for approved subcontractors. Also, I have someone attempting to ask a question regarding the EMR ratings, and from what I can get out of what they've typed in, I feel it seems to me that they're getting feedback from an electrical subcontractor in regards to providing an EMR of 1. If you're getting that feedback where they're refusing to give you the EMR documentation, too bad. It is a requirement of the department. So if that feedback is coming, they don't want to provide that to you, then we can't negotiate these additional items of work. If you need assistance on that type of issue, you can reach out to your regional change order specialist or main office. You know, they're the ones behind this requirement that the EMRs be 1. They've done all of the research and they know all of the issues involved. So if you're getting hesitation back from a sub or a prime, reach out above you for help with that.
Yeah, and the EMR, from what I have gathered, it was brought up by the AGC. You know, so I mean, it's part of the spec because I think the AGC wanted it to be part of the spec, and on the joint committees that we have with them, you know, we decided to change it. If the contractor is giving you pushback, just direct them to the labor portion of 10905, and it's going to clearly state that the workers' comp insurance must be based on an EMR of 1.0.
And I got another comment back here on the trucking, which trucking is one of my least favorite topics to ever have to discuss.
Yes.
Don't forget, so when I said that approved subcontractors for trucking need to be represented as subcontractors, not as services, you also still have to make the differentiation between on-site trucking and off-site delivery. So if it's purely delivery, asphalt material, if they come and they dump, period, and they leave, that is off-site trucking. That can be a service that is recorded in hours and an hourly pay rate. But if they are using these trucking firms for on-site trucking, so they come, they dump asphalt, but then they go sit under the milling machine, that is on-site, that is approved subcontractor work, that is labor, material, and equipment documentation. If there's any question about your trucking, whether it's on-site, off-site, a sub, a service, etc., again, your regional change order specialist and your regional compliance specialist can help you with those. And I'm going to get off the trucking slide before anybody else asks any questions about it.
And in Region 9, that regional contracts person can help you with subcontractor versus service questions. You're welcome, Heather. All right, here's another service. Look like maybe nuke testers. I liked this example because they went ahead and did some math for me. math that I didn't have to go figure out myself. Only a portion of this service was for the agreed price work, so they went ahead and showed me the math, which I love. I can go through and check this really quick. I don't have to hunt around, do it myself to figure out what they're charging us for this material. It looks like nuke gauge testers. And it's clearly labeled S2. I know right where to go on the Merc 26 to check the dollar values. Equipment sheets, labeled nice. One thing I want to mention is that for agreed prices, you're using the FHWA rate, which is all the way to the right-hand side and also non-adjusted. So we're using that FHWA rate hourly top number. I can't quite read it. It's like 2571. So that's the FHWA rate. You'll put in the Merc 26 for this piece of equipment, multiplied by the hours, gives you the total reimbursement for the agreed price on this piece of equipment. Go ahead. Same thing with E2. These are going to go quick. I think there's 3 or 4 of them. There's 3, 4, and then like I said, the one thing you have to look for is they're using the FHWA rate, unadjusted. And the other thing that we like to see, labeled E1, 2, 3, 4, easy to go back to the Merc 26 and check. This is a letter contractor includes. It just breaks down their labor rates or their insurance rates. I don't rely on this solely, but it was in the agreed price workup, so I included it. But the next sheet, this is from the insurance company. You just got the statement of EMR 1.0. Breaks down. I think we talked in the force account portion of the training that there'll be different labor classifications depending on what they're doing on site. And this was concrete. They're claiming it was concrete bridge work. The rates highlighted, 13.35%, typically stated per 100. We go to the next slide. Oh, I'm missing a page there. Should be a letter for general liability in there as well, but it looks similar to this letter. It's just got to be a letter from the insurance company. Insurance company's letterhead stating the general liability. There's no EMR issues with GL. So you just need a letter stating, and that rate will sometimes be stated per 1,000 rather than per 100. So you just got to move the decimal point. You can go to the next slide, Amy.
Actually, we have a question. If the GL insurance is more than required as per the standard specification, which the standard spec that was quoted to me is an amount of not less than $1 million per occurrence and not less than $2 million aggregate, we have to pay the extra premium. So if they're carrying insurance that's more than those limitations, are we reimbursing additional premium for that additional liability?
I have not run into that myself.
Again, you know, main office, not to keep throwing main office under the bus here, especially since at least one of them I can see on the chat. But you know, any types of questions on the insurance and workers' comp and all of that. They know so much about the background of this because they're the ones that create the spec. They're the ones that get the feedback from the AGC. So if you have questions like that, or you see something funky on an insurance that you've never seen before, you can always reach out to our main office change order folks or your regional change order specialist to be the middleman. Things are always evolving, you know, in construction and insurance industry and all of that. So reach out. You don't need to make these decisions on your own.
Yeah, if you have a regional contracts person, Heather in our region handles the initial startup, all the paperwork where the contractor submits their actual policy. We don't want to see actual insurance policies attached to change orders because a lot of pages we don't need. But that would be something I think to look at that time, because the insurance letters we get for change order approvals don't give that much detail of information as far as the total policy occurrences and the coverage and all that. So that'd be something you want to look at early on in the contract, just as a general, general thing, because when it comes to the change order, your regional person would have to dig for it and wouldn't know, looking at a letter from the insurance company, that there would be an issue with the rate being in excess of what the spec requires. I will take a look at a force account. Some of the documentation is the same as the agreed price. I want to reiterate that the contractor is required to fill this stuff out. Region D number, contractor name, are they subcontract, prime contractor, item number, work description, work start, work complete is going to come from your MERC 31s, the date they submitted by, and the EIC or the designee, normally the EIC. Standard labor markup, fringe markups are fixed cells. You can't change those. Workers' comp policy date, that you'll get from the policy they submit. The payroll limitation, if you check yes, it will autofill the limit. Workers' comp rate based on EMR 1.0. Contract, this is a subcontractor, so this is subcontractor's general liability insurance based on payroll or total sales. This one is payroll. Enter the percent. Normally we don't adjust the profit and overhead. 20% on your normal D jobs. This will change for where and whens. And the added insurance, CGL for the prime, only if the prime's general liability is based on total sales. Total number of MERC sheets in the package is the last cell at the bottom. So that's all your summaries. Don't include your MERC 31s, your daily. That is just the sheets you get out of the Excel spreadsheet.
And when you're filling out, or when the contractor is filling out this MERC cover sheet, the date submitted is the date that the package is submitted to the field office. If you review this package and you send it back to the contractor for correction, they should be changing that date submitted. It's not the date that you're submitting it on the change order. This is the date this package is being submitted to the field office, to the EIC for review. Additionally, the workers' compensation rate and the program weekly limit are for the period that the work was performed. So if you're reviewing packages that are old, you're not using the current 2020 weekly limitation rates. You're using the limitation rates and the workers' compensation rate from when the work was performed. Those are questions that I received.
Yeah, and if the same work is carried over into the next year or the next policy year, then they have to submit 2 separate packages. Because the payroll limitation will change. We had that on our Prospect Mountain job. It was a long-term, ongoing force account, and we had to break it down, break out each year. Labor rates also changed, and insurance policy rates changed, and so it could be the exact same work, but if you go over that, you know, the new year or policy period, that payroll limitation could change, and you'll have to submit 2 packages for the same work. Splitting it out, you know, work up to, say, the end of December, and then work starting January 1. Here's the MERC 20 force account summation. You see, we're going to be looking for 2 separate pay periods. So we'll have 2 labor summaries, one ending 10/10, one ending 10/17. We can tell by looking here, we're going to be looking for a material summation and backup documentation, and equipment summation and equipment watch sheets. And it looks like they have no services. Just go back 1 second. It is critical that these are signed and dated. That will get it sent back. If it's missing a signature, it'll be sent back. Here's the first labor summary. I love to see check marks. Tells me somebody actually made an effort to verify hours, rates, cash fringes. Everything to the left of that bold line between G and H, the contractor will fill in. Everything to the right of that line is auto-calculated. You notice at the bottom, check by. I like to see that. I don't always, but that tells me somebody took the time to look through this prior to it hitting my desk. Here's the second labor summary. Again, the check marks, you'll see the period end date is 10/17, which corresponds to the MERC summation. Second, yeah. Oh, okay, that's good.
Sorry, trigger finger.
That's okay. On to material summary. The ID numbers are auto-filled. You cannot edit those. So M1, 3-inch rigid PVC. I see somebody checked that the quantity was 60 feet, and that it was about 14.5 cents a foot. You know, they got shielded lead-in cable and some 3-conductor. So I'm looking for 3 materials invoices to go along with this summary. Go ahead. And equipment sheets. It's the equipment summary. Model number for this IR air compressor would have helped. But it's a 92 air compressor. Now this 909, 718, these are contractor ID numbers. That is the number they associated to their piece of equipment. These can be helpful if they're consistent in their dailies and their equipment summary. Most of these dailies that you're going to see are going to be filled out by hand, and everybody's penmanship is a little different. Some are better than others. But if they just have, you know, air compressor 909 on the daily, you know, and someone in my seat might be saying, well, geez, how do we know what kind of air compressor that was? But if they filled in 909 on this equipment type, air compressor, Ingersoll Rand, used for an hour and a half, I'm pretty confident that they got the right piece of equipment and the right reimbursement rate. Checked by at the bottom is always good. All right, here's that. Oops, go ahead. All right, now we're into the material backup. I like to see M1, that's great, unit price circled. Now that, if you look at the units of measure there, that's C, usually per 100, or in this case it might be per 1,000. M2 labeled unit price. Same thing with M3. Now those are invoices, technically paid invoices, to be 100% correct. Equipment sheets. For force account, we're going to be looking at the adjusted monthly, which is the bottom row under the monthly column. Adjusted monthly and the estimated operating costs. Those are the two rates. Those are the two dollar values. The contractor is going to punch into the equipment summary sheets to calculate the total reimbursement. Same thing with E2. You'll see that all of these have the region adjustment and the model year adjustment. Same with E4. We have 5 pieces of equipment. Now this is a Merc 31. This is the daily force account records. Most of the times these are not typed out, filled in on a computer, but I had to recreate these to protect the innocent. Mr. Presley was a foreman, worked 2 hours regular this day. We got Chuck Berry and Connie Francis. Labor, trades, and groups are labeled okay. No materials used. Over in the equipment, we had the compressor, IR 909, used for a half an hour, and a John Deere backhoe, half an hour. They are printed names, signed date at the bottom. And the statement of work accomplished, you know, saw cut around pull box for future road cut, that's suitable for a total of 6 regular hours and an hour on some equipment. Go ahead. So this date was 10/7. This date here is 10/12. Remember back to our labor summary. and the force account summation, we had a period ending 10/10 and 10/7. So this is 10/12, so that means we're on to the 10/17, I think it was, 10/17 end period. Trades and groups are filled out, names first name last, last name first. Here we got some material description, 3-inch rigid PVC, 4 pieces of equipment. Dodge, the trucks, reimbursement can change, based on cab type and stuff like that. So the more detail they can get into these dailies, the easier it is to figure out down the road what the reimbursement rate for a piece of equipment. Even like the John Deere backhoe, that could have different cab types. Could be an open cab, an enclosed cab with windows. So if your field guys document that on their IRs, that can help eliminate any confusion down the road. Signed, dated, statement of work completed. Pretty straightforward. All right, now we're getting into the backup documentation. Workers' comp insurance states EMR of 1.0. Wait a minute. Here's a liability insurance. They've got 3 separate insurance rates. I think the 8.22 was the correct rate they used for conduit construction. Whoa, we missed some stuff there. Included in this package should be also the, did we do the materials? Amy?
Yeah, we did.
Oh, okay.
Yeah.
All right, so there you go. Insurance letters, last thing on that.
So we have a couple questions, and I'm going to backtrack a few slides to take care of them.
Yeah.
If that's all right with you. So somebody pointed out, I believe it was on this slide. Nope. Okay, on this one. Your operating hours, your operator hours should be matching your hours on the equipment.
Yeah, that's a good catch.
That is correct. On force account work, sometimes we are bound by the union agreement. So there may be a circumstance where the operators are guaranteed 2 hours a day. So if this was the only work going on that day, maybe, and I don't know this specific contract, maybe that's why the operator is shown for 2 hours when they only had the equipment for half an hour. So each individual force account is different, each region is different, each union is different. But yes, as a standard practice, you should not be compensating more labor hours than equipment hours when it comes to the operating engineers and the Teamsters, et cetera. So good catch on that. Somebody's awake.
Yeah, but here's one thing I want to add to that. If this gets to my level in the region, and I see that there's 1 hour difference for an operator versus the equipment, it will cost both the department and the contractor far in excess of that hour's wages savings for us to go back and change. So you got to figure my hours to re-review it, the project manager's hours to re-review it, the contractor's hours to adjust it and resubmit it. You get to a point really quick where everybody's losing money by making that 1 hour change. So that's one thing I learned from Brian DeWald, is not to trip over dollars to pick up pennies. And this is a prime example of where, if I caught that, which I didn't in my initial review, I probably would not make a stink about it, because it would cost more to fix it than we would save.
And this should have been caught when the Merck 11, or oh my God, I'm old, when the Merck 31 was turned in to the EIC, at the end of the day or the next morning.
Yes.
Someone also questioned, I lost the questions because, oh my God, you guys are blowing up my chat. Are you reviewing, do you have to attach the Merck 31 to the change order? Yes. These are part of the documentation. And when we went back to the labor summary sheets and we saw all of the check marks, a check mark here in column E indicates that someone added up all of those Merck 31s and made sure that those were the total hours that were entered here. The check marks for the rates and the fringes are saying that someone checked the certified payrolls and that these were the proper rates for those employees during that time. So yes, the 31s are part of the backup. They are attached to the change order, and all these check marks and these checked by statements are indicating that, someone in the field office checked all the math, checked all the backup was there, all the material invoices, all the equipment invoices, etc. We had a question about standby hours. Another thing that you may see on a Merck 31 is that maybe the work did take 2 hours to perform, but they only used the backhoe for a half an hour of it, and maybe they're going to include that backhoe on standby for an hour and a half. You may also see that. Not necessarily going to happen every single time. Another thing to keep in mind, we discussed in previous sessions, equipment is rounded to the nearest half hour. Labor is rounded to the nearest quarter hour, so you won't always have that perfect match. And again, union agreement may guarantee minimum amount of time, or may also include that the operator gets paid grease time, etc. Again, every region, every contractor, every union, every day, every week, every month, every year, it's all case-by-case basis. These are the general rules of thumb that we're sharing with you. Does the inspector write the actual hours or the adjusted hours based on union rules in Merck? You're old too, you said Merck 11. The Merck 31s are filled out by the contractor. If the person signing on behalf of the department, which it should be the inspector who witnessed the work, if they are contradicting those hours, if they should be making a notation somewhere. It will come down to the office review. The inspector rarely will know what the union rules are, but the office engineer, the EIC, will know what they are. But the inspector signing the Merck 31, if they have any disagreement with these hours, they can make an annotation of what they've witnessed. Just want to make sure I caught everybody's questions. Should there be standby hours? What do we do with taxes on materials? So let me go back to the material summary page. First of all, the state does not pay sales tax on material permanently incorporated into the work. So for this particular force account, where it's PVC, shielded lead-in, and free conductor, we would not be compensating sales tax if the contractor paid it. They have documentation they should be providing to their vendors that they are sales tax exempt. If they don't do that, or if the vendor doesn't accept it, that's not our responsibility to reimburse. However, they may have materials on a force account that are not permanently incorporated into the work. Form work on concrete, is one example that comes to mind immediately. There is a column for sales tax. So if your materials invoices show sales tax was paid and it's not a permanently incorporated material, we will compensate that sales tax here. And I don't know the latest and greatest 10905 spec. I don't remember if that is then calculated into the overhead and profit or not. It didn't used to be, but I really don't know anymore. I think that we are now.
I think it is now.
Same thing with taxes on services. And this force account example did not have a service sheet, but the service sheets do have a location for sales tax. Oh, I lied. Wait, no, I'm looking at the latest sheet. They do not have a specific column for sales tax. I've had inspectors refuse to sign MERC 31s because they felt that it puts them at liability for the exactness of the info. How much liability responsibility are they subject to? The inspector signing the MERC 31 is only signing, and let me bring up a 31 again. They're only signing that that is what they witnessed. The equipment used on this work was the proper size. The material taken from stock is shown above is fair market value, which they don't know that. And the account herein is shown an accurate statement of labor, material, and equipment on this day. The inspector is not guaranteeing this will be paid. They are only stating that this was the labor, material, and equipment used on this day. They have no liability and no responsibility to pay the contractor from this MERC 31. That is the engineer in charge's responsibility. And again, like I said, the inspector's not going to know the union rules. If they write on here that only half an hour of work was performed when they sign it, and later it's determined in the field office that we are required to pay the minimum 2 hours, that's the EIC's responsibility. That's their liability to pay the contractor for that. It is not, the inspector has no skin in the game. It's not coming out of their paycheck. All they're saying is this is what they witnessed. And that is a common argument. But again, education, inform them, show them in the spec where it says that the MERC 31 does not guarantee payment. On agreed prices, the labor rates are checked against prevailing wages or the payrolls or both. Both. We discussed in the agreed price session that you're showing labor types, not specific laborers. So you're not going to have a specific person's certified payroll to check against the agreed price. You're going to check the prevailing wage rate schedule, and we have limitations in our specifications that we will only pay, and don't quote me, it's 110 or 150% of the prevailing wage rate schedule on agreed price work, if they are historically paying those types of workers that. So you're going to be utilizing prevailing wage and payroll for both agreed prices and for force account, because again, our force account rules, I believe, also have that 110 or 150 limitation. If the invoice provided for a service includes taxes, it's acceptable to pay for it. Yes, because services are not material permanently incorporated into the work. So they are entitled to be paid sales tax on services and non-permanent material. If the vice president, for example, works as an operator, operating machine, is he eligible to get paid in the force account? If he is on the certified payroll, yes. We only reimburse labor on force accounts that are substantiated by certified payroll.
Right. If he doesn't show up on the certified payroll, he's salary and is counted in the profit and overhead.
And before anybody jumps on and asks me about time-related dispute compensation, we are not going to get into that today. That's a whole separate ball of wax with other types of backup documentation and requirements. Reach out to your regional change order specialist for that. So, all right, now moving on. So those are your agreed price and force account package examples that you'll be attaching to your header. Eric discussed If the net value of your change order is in excess of $20,000, you need a funding memo attachment to your header. This is an example of the March funding memo. It's actually a 2-page at the moment. Why they can't shrink it into one, I don't know. But you'll attach this as a PDF to your header. And then once you have your header and your attachments and your items and your quantities and your explanations and all of that, and it's been checked and double checked within your field office, you're going to submit your change order for approval. An FCP, a field change payment change order, only goes to the regional construction engineer. If it is a $0 and it doesn't require FHWA and it doesn't have fuel and asphalt in an excessive amount, it will default when you calculate your change order. Another screen we forgot to put in. When you calculate your change order and it comes to $0, it will automatically default to the regional construction engineer, and you'll only have to fill in these 5 approval levels. However, if it doesn't come to 0, if it comes to 0.01 or negative 0.01, you're going to have to override the approval level because it's automatically going to want to send that to OSC. There are QRGs, multiple QRGs, I believe, discuss overriding. You can only override if you meet the circumstances that allow for an override. And again, if you have an FHWA project, you don't need FHWA approval for an FCP. And if your fuel or asphalt is in excess of 999% of your original quantity, which in a bad index year it very well could be, that will want to go to OSC, but you can bring it back to the regional construction engineer. By default, all of our change orders, we have an approval level for the contractor. It never actually goes to the contractor. It's just an automatic level that goes in. And then the EIC, your regional change order person, then the area supervisor, and then the regional construction engineer. And you will have to put in specific names for these 4. For a traditional change order, now we're not talking about FCPs anymore. This is a change order for increases, decreases, force accounts, warranty, field change sheets, et cetera, et cetera. These all have to go to OSC. And I apologize, our graphic got a little messed up. But in addition to the first 5, the contractor by default, and then the 4 real people in your region, you're going to send it to the main office construction change orders specialist, which at the moment is Joseph Tuttle. Main office construction director, which at the moment is John Neidhart. And then main office accounting funding, main office accounting fund supervisor, and comptroller funding. Those 3 names can change at any given time without our knowledge. You should always go to the QRG. There's a QRG for change order approval list. And from Joe Tuttle through to the comptroller funding person, those names are on that QRG. Again, if it's not an FCP, all change orders go all the way to OSC. If you have a $0 change order, it may default to regional construction engineer, but unless it's an FCP, it has to go to the Office of State Comptroller. And again, where are you going to find how to do an override? You're going to find it on a QRG. How do you know if you need FHWA approval inserted into your approval levels? On your contract records tab in Site Manager, on the right-hand side, there's a box that tells you what your funding level, where your funding's coming from, whether it's federal, state, or both. You may have federal funding, but not require federal oversight. You will need FHWA approval if this checkbox is checked. So if you have federal funding, but the checkbox is not checked, you're going to use the traditional approval levels. If you do have FHWA oversight, it will automatically be included in your list. You will have to know specifically the name of your federal liaison, and you'll have to put them in there when you go through the approval levels. If you don't know who your region's liaison is, reach out to anybody, your RCO, your regional change order specialist, or your contracts engineer will know who that person is. And again, on an FCP, you do not have to send it to the FHWA liaison.
It may try to force you to send it to them. In that case, you'll go back and do the override.
Correct.
And one thing I want to add is that the override, it's just a checkbox on the header. For those who might not be familiar with change order header tab, it's just a checkbox. So if you need it, that's where it is.
Don't forget that this training is geared toward traditional design, bid, build projects. If you are on a design build project, you will always be overriding the approval level to add in the design build personnel that need to review these. There is a QRG for that. Actually, I take it back. The QRG for approvers is 2 pages. The first page is design, bid, build. Hopefully, let's say 90% of us on this class. The second page is for the design build approvers. So how long is it going to take to get your change order approved? It's going to take a long time, period. That's all you need to know. It may take you days, it may take you weeks, it may take you months in the field office to get to the point where you sit down at site manager and create your change order. It could take you days, theoretically, depending on the magnitude of your change order, and especially as you get closer to the end of your job, if you're doing your cleanup orders, to get all that information in. And it really needs to be checked by someone else. You know, you can go cross-eyed and a little bit batty, inputting all the items and quantities and explanations for a change order. Have someone check your work before you submit it to your region. Some regions handle things differently. Some regional change order specialists will review the change order while it is still in draft status. Other regions require you to submit the change order in pending status before they will review it. Find out what your region's procedure is for that. Your EIC has to approve it. As the office engineer, you're submitting it, you're changing it to pending status, you're putting in all the approval levels. The EIC will then get an email from site manager saying that there's a change order to be reviewed. Once they review it and they approve it, the regional change order specialist will get an email from site manager. They do their review, they push the button, the supervisor gets the email. They push the button, the RCE gets the email, and so on and so forth. Any of these steps can take, again, days to weeks. It all depends on the workflow and how many contracts are out there putting change orders in. I will advise you all, don't let your FHWA liaison see your order on contract for the very first time when they get that site manager notification. They should be in the progress meetings. They should be in the conversations. They should know that these changes are coming about. You should not be blindsiding them when they get the site manager notification. So after everybody that actually knows what's going on the project reviews it, and main office gets an idea now of what's going on the project and reviews it, then it has to go to finance. And they make sure that you have all the funding available before they even send it to OSC. So especially if you're adding new categories or new funding or shifting funding, this is where that preliminary communication needed to be in place. We have to know that it's not going to get held up because nobody put the funding in place. And then they send it to OSC. And OSC goes through it with a fine-tooth comb, even though we've all done that. You know, they review everything. And there are times that they will ask questions. And when they ask questions, usually what I've seen is they give you 3 days to answer questions, or else they're going to kick it back and deny it. And correct me if I'm wrong, Eric, once the change order has been denied by OSC, it cannot be deleted. It can only be redone as a new change order with the answers or issues addressed. But it will always be in the pipeline and in Site Manager as a denied change order.
They've gotten so they don't deny change orders because I think they realized the effort it takes to go back and recreate the entire change order. So what they do is non-approve it. They don't check the deny, in my experience. They'll send you questions. They'll give you the 3 days to respond. You can ask for an extension on those 3 days, though. I learned that. But they do not go into Site Manager, select deny, and save, because that does lock the change order forever and ever. So they call it non-approving, and they'll ask the region to put it back in draft and address their concerns.
All right, and then once OSC approves it, they file it, and we get the notification back. Now, here's the kicker. At the moment, OSC is shut down to us, so any change orders that are in the works right now will not be sent to OSC until, I believe, the 5th of April is when they're reopening SSS. OSC can only receive and review one change order per contract at a time. So if you send 3 change orders up 3 days in a row, 2 of them are going to sit at the finance level until the first one comes back approved. Whatever you do, once you've started a change order through the path of approval, don't pull it back unless you've been told to, or unless you notify the next person in the chain that you need to. It creates a big problem for everybody if you pull it back and resubmit it and they didn't know you were doing that. So be very careful with your change orders. Make sure you're ready to send it when you send it. And again, we don't like to see change orders denied, and it's great to hear from Eric that OSC doesn't like that anymore either. So if somebody in the approval chain finds an issue or wants a change, they will notify you to pull it back to draft. So any change order can be pulled back to draft at any point in the process. But what we're saying here is don't do it without communicating with the approval line above you. So some tips and tricks that Eric's going to go over to try to help you with the change order process.
All right, it's better to do smaller COs as needed rather than one large CO. Like Amy was saying, if they're going to be really close in time, like you're going to be submitting change order 1 today and then change order 2 on Friday, that might be a case where if the change order types are compatible, you can combine them. But in general, if you're doing weekly reviews of your ConR 22, you know where you're at on quantities, you get in kind of a rhythm. Okay, if this is a long-term job, long-term contract, we're going to do, we're going to clean up minor overruns on field change payment, and then every month we're going to look at where are we at with big changes. So smaller, more frequent orders are typically better. They're easier to review. and they'll move through both the regional office and main office quicker. But like she said, there can only be one change order in that OSC system at a time. So if you have a situation where maybe you have a time-sensitive time extension, that still requires that typical 1 week wait for OSC approval. If you got a small order in front of it, you might want to let your region know that, hey, I got this time-sensitive time extension that I want to get in ahead of that smaller change order. We can communicate that with main office and typically get that done. And that small COs completed at the same time will delay approvals because of that 1 week. That each order has to wait 1 week for processing in that OSC system. Include all associated work together in one change order. Example is if the limits are extended on a mill and fill contract, you'd want to include all the milling increase items, tack coat, blacktop, striping, anything associated with that. And that's good practice. If you have a change in site conditions that affects multiple items, number one, it's easier. It's one explanation. You know, milling and paving limits were extended beyond station, 75 plus 100, for whatever reason. That'll be in your explanation. One explanation for half a dozen items, that's easy. Where possible, balance your change orders with decreases. This is especially important if you're doing something like changing a guide rail end section. If the designer proposed a type 3 end section, but it was determined because we flattened a slope or something, hey, we can get a type 2 in here or a type 1 maybe even. If you increase your type 1, you're also on the same change order going to want to decrease your type 3s. So that automatically balances out quantity-wise. We'll save money switching from a type 3 to a type 1 or 2. But also, just in general, if you have an increased change order, which is starting to get pricey, you can start searching around in your Count R22, maybe looking for items that you're not going to use all of. You can start saving some of that increase. Put the decreased items in the change order and try to balance it out the best you can. Can't always do that, but it's good practice to at least look. Now, don't go taking stuff out that you could potentially need in the future, but if you know you have something that's going to decrease, go ahead and, if you have an increased change order, go ahead and throw it on that order as well. Change orders are not required to be submitted sequentially. In theory, you could have change order 5 approved before change order 1. That's no problem whatsoever. Work is being added for local shares, betterments, towns, school districts, etc. Include this work on its own change order and ensure that the funds have been deposited in the comptroller prior to submitting the change order. So that's something you'll have to communicate with your regional office on. And typically you see this coming, and it takes some time to get those funds settled. And if the funding's not been received for the change order will be delayed. A good practice is, if you see this situation coming up where you have a betterment that's going to exceed the dollar value, you'll be in contact with your supervisor, who will be in contact with your change order person and your planning group to make sure all this gets taken care of. Really, probably well before the change order is processed. So that will help to avoid the situation of a change order being delayed. Here's, I already stated this, but if an item is being replaced with another item, make sure the original item is subtracted out, you know, and state that in your explanation. And if the quantity of a major item falls below the 75% threshold, and the contractor requests to renegotiate the price, a new item is included. This happens a lot right at the end of jobs, either from inattention to the major items, but when you get down to the end of a job, it can be a pain in the butt when you have a 75% threshold. You haven't met that threshold. The contractor has every right, as does the department, to request a renegotiation of the price. If they choose to, and they can document their new price, you'll deduct the entire quantity of the original item in the change order, and on the exact same change order, enter the new renegotiated major item price. When a new item has been introduced due to the renegotiated unit price, the over and under run was reported on the existing item. If you have only entered it under the original item, it will be subtracted from the existing item and adds the, okay, so what they're saying here is, in general, the way I would tell you to deal with this is, if you have an item, and this is typically on an increase, if you have the original item in the contract, keep paying on that original item until you have established a new agreed price and have entered the new item on the contract. That way you have record of the payment. You have the record of the date it was installed, whether it be blacktop or gravel or whatever. You have that recorded in Site Manager. Though it may be in excess of 200% or 125%, it's in Site Manager. So then what you're going to do, you're going to get a new item, you may get a new agreed price. That item's going to go on a change order. As soon as that order is approved, you can then go on a DWR and move those payments from the original item to the new item. That's the best way I've found to handle that. And you need to be careful about fuel and asphalt adjustments when you're moving quantities like that from an existing item to the new item. You need to pay attention that the fuel and asphalt reports are either catching the new item or that you hand calculate them correctly, because the fuel and asphalt will be calculated based on the date installed, not the date the new item was added or the date that it was moved over to the new item. So that's one thing for fuel and asphalt items that you're going to want to pay close attention to. While waiting for approval, make a copy of the complete package. Package should include the CONR 7 combination report from Business Intelligence. Save it in a file, send it to the contractor upon their request. Once the order is approved, print the approved CONR 7 from BI. We're going to look at a CONR 7, and I'll show you where you can tell right in BI if a change order has been approved. Every region is going to handle this next part a little differently. Sending a copy to the regional compliance specialist, regional subcontractor approval specialist. In Region 9, when an order comes in, the regional office will handle all that, dispersing the information to the compliance specialist and the subcontractor approvals. And they'll look at the CONAR 89 and make sure that the 50 CONAR 89 is revised, subcontractor approvals is warranted. Notify the contractor to review the EBO and to appropriately assign and or reassign the increased, decreased new items to the respective subcontractors. If the contractor does not complete this in a timely manner, inspectors may have problems selecting subcontractors on DWRs from the contract work items drop-down menu. All right, now here's that example. It's the CONAR 7 explanation analysis combination report. I can tell just by looking at this one page that this order has not been approved yet. Because if it was approved, right above the D number, comptroller contract number, it'll say in red, approved, and the date it was approved on. So Region 9, this is the form we use. I actually helped create this form with Tom Weiser, our regional construction engineer, and Tim Billowis back in the early days of BI and site manager. What this does is it takes the old analysis, the old CONAR 7 and the explanation forms, and lumps them all into one. There's a double, if you look at the federal aid project number, M240, 4033-023, you'll see a double line there. If you notice, when you're in Site Manager, you'll have different options to apply your explanations. Most of the time we use apply explanations to specific items. If you choose general explanations, which some regions may or may not allow you to do this, but where that double line is where the general explanation will be shown on a CONAR 7. You'll see this lists the item, the line item numbers. Is it an existing item, new item? And it's got all your basic CONAR 7 data, quantity, unit price, description, authorized quantity. And it calculates the increase and decrease. So this is page 1 of 24. I don't think we have all 24 pages, but this is just a sample of the first page of a CONAR 7 combo report. Look at the top. Oh, go back just one quick sec. This is something we had added a little while ago, but change order type is now displayed at the top as well. So this is a regular change order, not a field change payment. Time extensions are obvious because there's no items associated with them. That helps in my review because I can look at this, just this front page of the CONAR 7 and know what to expect. All I got for that.
All right, well, we are over on class, but I've been watching the attendance number, and I appreciate all of you that have stayed. Don't leave yet. We got a few questions. What if you're balancing? So this goes back a few slides. What if your balancing of an order results in a no cost or minimal cost CO? Well, the point of balancing your change order is that we want them to be minimal cost. We don't want to have multiple increased cost change orders, and then at the end of the project, we give back a ton of money because all those times you had a net increased change order, you know, more funding was poured into your contract. And then if you go give it back, you're just creating a little bit of a headache for your planning and funding groups. So it is ultimately beneficial for everyone if you can balance your change orders as much as possible. But again, this leads into the next question. What if we decrease an item to offset a change order and then later we need more? You don't want to decrease items too early in the contract. But through the course of your work, you may know that you are finished with an item, especially if you have staged construction. But you should always try to get contractor concurrence on that final quantity at that time before you go and give that excess quantity back. You can increase a quantity that you've already decreased on a future change order, but as part of our discussion on explanations, you need to, in your explanations, every time you use an item, you need to discuss what you've done with that item previously. So just keep that in mind. If you're balancing an order and you do bring it to $0, maybe take some small item back out of that order to try to not have a $0 change order going to OSC. Which also segues into another question, or clarification, I should say. Thank you, Debbie. There is a difference between $0 change orders in the traditional sense on a design bid build. There's a difference with a $0 change order, which is a common occurrence on a design build. So again, if you're on design build work, please know that every time we said $0 today, we were not talking about your $0 change orders. Your $0 change orders are adding items to the contract at $0 value, and they only go to the regional approval level. So remember, this class was established for traditional design bid build. If you're on a design build contract, please discuss the nuances with your regional change order specialist before you go too far into your change order process. Should there be fuel and asphalt adjustment to renegotiated items? It depends. Fuel and asphalt adjustment is a whole other hour-and-a-half conversation that we could have with examples. Yes, you may be doing fuel and asphalt adjustment on new items, on renegotiated items. Sometimes you're not. It all depends on the timing of that. There is a fuel and asphalt guidance document. It's on the Office of Construction website via the CAM manual. It's not on the fuel asphalt steel adjustment page. It's in the CAM manual. Please, 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 everyone, read that and understand it at the beginning of your project and reread it again when you start adjusting quantities of fuel and asphalt adjustable items. Each region probably has a fuel and asphalt specialist. And if you're lucky, in the bigger regions, you have two. When I said you should get contractor concurrence before you put decreases on a change order, that's not something that you have to document on the change order itself. So you need contractor concurrence on the prices of items, whether you're keeping a bid price or whether you're renegotiating a price, or if you've adjusted a force account value after review. That concurrence needs to be attached to the change order. Any concurrence on actual final quantities are not attached to a change order. It's just best practice to not put a decrease on a change order until you know that the contractor is not going to dispute your final contract quantity. Do we have any? I think I've addressed all the questions that I received or that were addressed to the whole panel. Are there any other questions out there, or do any of our other panelists? The rest of you have all been very quiet today. If anyone has any other tips, tricks, or things that they want to add from their region's perspective, please feel free to pipe in. Okay, one question I got that's not related in any way to anything that we discussed today is that one of the regions apparently has quite a few people that have been invited to the SFS training for next Tuesday on how to input traveler expenses. I know my region is scheduled for a Wednesday. The way they're doing that is, you know, they're taking large groups of people and just dumping them into these training classes. At this time, this training team does not have any plans to change our training schedule for next week. We will try to get an idea of how many people this will affect, but at the moment, we are not planning on moving next week's session. We will make an announcement if we do. As a backup plan for you, please remember all of these trainings are posted. The recordings and the PowerPoints are posted. And I will share that once again next week or in an email to your regional change order specialist. They all know where to find them. So if you're unable to come next week, don't panic. I mean, I know you're going to miss all of us and this incessant talking that we do for an hour and a half straight, but don't panic. You'll survive. You can listen to it later. Are there any scenarios where a $0 change order needs OSC approval? Yes. If you truly had a change order, and again, this goes back to the first few slides of what requires a change order, warranty, paving, any changes to the contract values other than through FCP. A change order is a change to your contract. So anything that requires a change to your contract does require OSC approval. They just don't like $0 if we can avoid them. Doesn't mean that we're going to avoid every $0 instance. Just means we should try to. So it's a matter of what requires OSC approval as a change to your contract is what you should be asking, not the $0 aspect of it. All right, well, we still have pretty much the whole group of people on, and we do appreciate that you all didn't drop off because this is helpful information. Apologize for going over. If there's no other questions, we're going to end the recording. If you do have follow-up questions, feel free to send them to any of the panelists or myself as the host, and we'll try to address them next week. So again, next week is our final session. It will be time extensions, and we'll have some special guests from main office. So thank you very much. Everybody have a great week. Oh, real quick before I end the recording, if we have a betterment share, can we use a decrease item to offset the value? Only if it's within that betterment share. You cannot cross your shares.
Yes.
You can't balance an increase in Verizon by giving back work from O&R or your gas company, for those of you that aren't in Region 8. We will follow up with that next week. I think it would be important to remind people we can't borrow from Peter to pay Paul, and we can't offset an increase to Peter by taking money away from Paul. So thank you for that question. And that got captured on the recording, so we're good. All right, we're going to end it right now. Thank you very much, everybody.